So I'm going to record this meeting. Then, after the meeting, I'm going to send you the session.
Okay, sir.
So
Okay, sir.
yeah. So this strategy, it's a pure price action whereby we usually focus on nothing but the chart itself, the market structures. We don't focus on
Okay.
anything like indicators or robots or anything outside pure price action. So in this lesson, we're going to look at the market structures we usually use. The first market structure we usually use, it's called the invalidation point. In the invalidation point, let's say we are creating lows, we're in a downtrend, and at the time we have a downtrend, let's say price comes to break this structure right here, this structure right here. So when price comes to break this structure right here, this gives us a confirmation that we have a high possibility of changing the direction of the trend from a downtrend to an uptrend. So what you're going to do, we'll start looking for a buy. And at the time we're looking for a buy, we usually put our anticipation on this structure right here. We usually call it the invalidation point at this structure right here. So we'll be expecting price to drop and to come to respect this invalidation point right here to create more highs on the upside. So this will be our entry point. We usually call it the invalidation point. The invalidation point also, it's usually the second last structure. Okay, so this is the last structure and this is the second last structure.
Okay.
That's the invalidation. So this is an example when you have a downtrend, and just in case it's a uptrend, it will be as follows. So let's say we are creating highs and we come to break this structure right here. So after breaking this structure right here, we'll be expecting price to come to respect our structure, our invalidation point right here. So price may create a pullback coming to respect our entry. That's when we continue with a new trend. So this will be our entry point in this invalidation. Do you have any questions still there before we go to the live chat?
No, please. For now, I don't have any questions.
Okay. So in the live chat, we're going to look at some live examples on the invalidation.
Okay.
So the first example is right here. You can see that price. We had some sort of downtrend right here. Then price came to break this structure right here. So after the break of structure, we can see that price dropped and price came to respect our invalidation point right here on this in this week. Let me try to illustrate. So let's say we had a downtrend right here. We made an invalidation. After having an invalidation, we came to break this structure right here. And after breaking this structure right here, price dropped and came to respect our invalidation point right here. Also, another thing about our structures, we usually place our entries on the candle body, not the candle wick. We usually place all of our entries
Okay.
the candle body. Let's look for more examples. Also, right here, we had an invalidation point right here. So as you can see, price dropped. We made our invalidation point right here. Then we came to break structure. Remember, we usually count it as an invalidation after the break of structure. So after price broke this structure, that's when price dropped and came to respect our invalidation point to create more highs on the upside.
Okay.
Yeah. Tilda, do you have any question about the invalidation point?
I would like to ask, does it work on all time frame?
Yeah, sure. It works on all time frames.
Okay.
It works on all time
And
frames.
when
Yeah,
you are drawing the invalidation point, you pick the candle body instead of the wicks.
yeah, sure. Usually place our anticipation at the candle body, not the
Okay,
candle wick. If you place your
not
anticipation
the wick.
at the candle wick, you'll be missing some entries.
Okay.
Yeah.
And please, considering the break of structure, you consider the the body of the candle to be broken, not the wick.
When we okay, when you're talking about the break of structure, we usually consider the wick. Remember,
Okay.
in order for when we say that price has broke structure, that means price has exceed this level right here. That means we have
Yeah.
to consider the wick.
The wick. Okay.
Yeah,
Okay.
and our next structure we are going to learn, it's called the new invalidation. So
Okay.
the new invalidation is somehow it looks like the normal invalidation somehow. So let's say we have a downtrend. At this time we have a downtrend. We come to
Okay.
break this structure right here. After breaking this structure, we'll be expecting price to drop to respect our invalidation point right here.
Mm-hmm.
Then let's say price may drop. Then at this time when price is dropping, price may not respect our invalidation point, then price starts to create more highs. That means we have missed this entry right here. So
Okay.
what we are going to do, we are going to place our anticipations right here in this latest structure that has been made. This will be our new invalidation point, whereby we'll be expecting price to drop to come to respect our new invalidation point to create some new highs on the upside. So this will
Okay.
be our entry. Though our new invalidation sometimes let me illustrate. Sometimes the new invalidation let's say we may create lows, and these lows comes to respect our invalidation point right here.
Okay.
Okay? Then we start
Okay.
creating more highs. This will still be called the new invalidation, even though it has respected our invalidation point. The point of the new invalidation is uh, it's uh, it's the anticipation we are going to have to have the next entry if price creates a long-term pullback. So our price levels are where we placed our entries. So the new invalidation may not respect the invalidation point like the first example, or sometimes it may respect the invalidation point. Okay, and sometimes
Okay.
it may break the invalidation point. Price may price may drop, then comes to break our invalidation point. Then price starts to create more highs. This is still called a new invalidation point.
Okay.
Yeah. So this is an it's an example when you have a downtrend. And when you have an uptrend, so let's say we are creating highs. At this point, we are creating highs. We come to break this structure right here. And after breaking structure, you'll be expecting price to respect our invalidation point, because we don't know whether the price will drop or will come to respect. All we do is play with the rules we have. As long as price has broke structure, that means we have to place our anticipations on the invalidation point. So price may come and not respect the invalidation point, then drop. So this will be our entry, whereby we will be expecting price to come to respect our new invalidation to create more highs. To create more lows. And also price may respect our invalidation,
Okay.
then make a drop, or price may break our invalidation point, then make more lows. That means all of these will be our entries to take the next entry if the price reverses. So this will be our entry right here. Let's check out the live chart.
Okay.
Okay, I see we have an example right here. So let's say in this structure right here, we had our invalidation point right here. And let me see. Okay, if we go to the lower time frames, this will be our exactly invalidation, because we have these long wicks. And these long wicks means we have some candlesticks if we drop to lower time frames. So this will be our invalidation point, whereby we broke structure right here. And after breaking this structure, our anticipations were priced to come to respect our invalidation point, but price didn't respect our invalidation point. Price continued making more lows. So that means, remember we said, like, if price doesn't respect our invalidation point, that means we'll be expecting price to respect our
New invalidation point.
yeah, of course, our new invalidation point. That means this would have been our entry for this price right here. So we'll have take this cell right here, and on the, let's try to look for more examples. We also have another example right here. We can see that we had an invalidation point right here. And we came to break this structure. We broke this structure right here. And after breaking this structure right here, we expected price to come to respect our invalidation point, but price didn't. Price continued creating more lows. So our anticipations were placed on this new invalidation right here, whereby price dropped, then price came to respect our new invalidation to create more lows. Do you have any questions about the new invalidation?
No, for now, no. No questions.
Okay. Another structure we are going to look at today, it's called the invalidation X.
Okay.
So, yeah, that's the last structure we're going to look at this lesson. So the invalidation X, let's say we have a downtrend, and at this time we have a downtrend. Before price breaks this structure right here, before the break of this structure, before price goes up to break this structure right here, price may create another structure inside before the break of this structure. Price creates another structure inside. So after the creation of this structure right here, we'll be expecting price to come to respect this structure that is inside this this level before the break of this structure right here. So this will be our entry right here. You'll find yourself taking trades at the beginning of a new trend most of the time by using this this method.
Okay.
So this will be our entry right here to create more highs. This will be our entry that we usually call the invalidation X. And let's check out an example when you have an uptrend. So let's say you have an uptrend and price is coming to break this structure right here. Before the break of structure, price may create another structure, then price comes to break this structure right here. That means we'll be expecting price to come to respect our invalidation X right here, the structure that has been created before the break of this structure right here. So we'll be expecting price to come to respect our invalidation X to create more lows. Let's check out some examples in the live chat.
Okay.
You can see that we have an example right here.
Okay.
This was our invalidation point, and before the break of structure, price created an invalidation X right here. So this was the entry for this cell we have right there. And also another thing about the invalidation X, sometimes it may be like this. Let's say we have a downtrend. Then at this time, price may create an invalidation X without having an invalidation on this side. This usually happens sometimes. Let's say we have an impasse. That's when you have an invalidation X without having any sort of invalidation on this side. So we'll consider it as how it is. We'll be expecting price to retest this structure right here to create more lows. whereby we have an example of that structure that was right here. Yeah, it was right here. You can see right here we have an invalidation X that was respected right here, but we didn't have any invalidation right here. The invalidation was too low. So let's look for more examples on the invalidation X. Do you trade indices?
Yes, I trade indices.
Okay.
I trade synthetic indices more than currency.
Okay. Okay, we have another example right here. On this structure right here, we had our invalidation point, whereby the break of structure was right here down. And before price broke structure, price created another structure right here, our invalidation X. Right here. Whereby after the break of structure, price came to respect our invalidation X, then price created more lows on the downside. We also have another example right here. We see that we had an invalidation right here, and we had an invalidation X right here before the break of structure. So price broke structure, then price came to respect our invalidation X to get this low right here. So what you're supposed to do to prepare for the next lesson, you have to make some practice on these structures. You have to go and back test. You have to open your trading view, then try to look for, you try to find the invalidations, invalidation X, the new invalidations, so that you can get used to them. Because as long as the more we proceed, the more we are going to use them a lot, especially in the top line analysis.
Okay.
Okay, then let me send you this meeting.